Hey YouTubers, welcome back to my channel. So I'm Sai, and on my channel I talk about investing for beginners like myself, as well as a bit of tech and general business ideas. So today's video, I'm going to be continuing the series I started a few months ago, where I invest £100 a month into the stock market and show you exactly what I'm investing in on Trading 212. But as always, I have no financial background, and so before investing in anything, I always recommend that you seek professional financial advice. But right now, the advice I'm going to give you requires no financial knowledge whatsoever, and that's make sure you smash that like button until it changes color so that you can help the YouTube algorithm in recommending this video to lots more people. So first of all, let's take a look at my portfolio from last month. Now, as you can see, we have just under £400 invested. And we can also see that I've made a 10.33% increase, which is pretty great, as that translates into a £41.19 profit. Now, let's take a look at how each of these individual companies has actually done. So first on the list is AbbVie, the share I bought a couple of months ago, and we can see that this has gone up in value by 19.55%. And when we open it up, we can also see it's still got some potential with AbbVie to hit its pre-COVID highs. So hopefully there'll be a little more gain with them. Then we have Amazon, which unfortunately has gone down 2.1%. which is not a lot, so not really worried. But either way, I expect to see returns from Amazon over a long period of time, rather than in the short term. Then we've got Apple. Now Apple, it's gone up a little bit, 0.76%, but again, very similar to what I said about Amazon. I'm looking to see this as a long-term investment and see this grow over a long period of time. Then I've got AT&T, which has dropped 1.92%, which is actually pretty good, as they were down 6.39% the month before. So they're actually recovering, and the same applies here with BP. Now it's still the worst performing stock in this portfolio, however last month it was down 31.73%, and this month it's picked up quite a bit in comparison, as it's only now 6.07% in the red. Then we have the two index funds that I invest in. iShares Core FTSE 100, which has gone up to 11.82%, which is pretty good. And then we've got the iShares S&P 500, which is also in the green with a 4.78%, which is also fairly good considering. And then we can see Pfizer, which I managed to buy just before the announcement of the COVID vaccine. And so obviously that's gone up a little bit as well, of 5.4%. And then good old Tesla, which seems to be the gift that keeps giving right now, as they were announced to be included into the S&P 500 later this month, which is why it's increased even further, and now it's sitting at 65.23% increase since I bought it. Now if I go into the menu here, and then we go into notifications, we can also see some of the dividends that's been paid out recently. So we've got Pfizer, who's paid out a dividend of £1.53. Then we've got another dividend here from AT&T that paid out 51 pence. Then we've got another dividend here that was paid from iShares Core FTSE 100, which was 33 pence. Then we've got another dividend paid here from S&P 500 of 12 pence. And I think that's about it on all of the dividends. So all in all, the portfolio is looking fairly good, and I'm quite happy with the stocks that I've been choosing. But I guess now today, with the £100 that I'm going to invest, as always, I'm going to be splitting it in three ways: into an index fund, a dividend stock, and a company that I've been following and personally feel like they will do well due to my research. So the first one I'm going to buy, let's go into the search, and I'm going to search for a company called Chevron. Now Chevron are in the same situation as BP, since they're both in the energy market. However, a few months ago, Chevron actually climbed to the top of the pecking order to become the largest US oil company by market value, which was the first time the Texas-based giant Exxon was relegated in over 100 years, which shows that Chevron's doing something right. And in general, with the research that I've done with Chevron, I've seen that they have a lower net debt to earnings, which is almost half the amount of Exxon. And Chevron also has a positive free cash yield in 2020, where Exxon has a deficit in comparison. Plus, when we look at the max lifetime of the actual stocks of Chevron, we can see that they have still not reached their pre-pandemic highs. However, they have started to recover, so I won't be getting the best of deals, but it still looks like that there is potential for the share price to rise. But as this is being my dividend stock for the month, the main factor is the dividend yield. And we can see down here that the dividend yield is 5.9%, which again is a great yield. And in the long run, oil and gas has no plans to go away from our lives in the near future. So in my eyes, we still have 5 to 10 years of good returns from oil and gas stocks. But Chevron is a little bit pricier than some of the other dividend stock that I have bought in the past. So if I was to buy one share of Chevron, we can see that that comes up to about £69.43. Now, this ends up leaving me with only £30.57 to split between my two other investments. But I've decided to go with Chevron today, so let's buy that share now. So if I review the order and send the buy order, great. And as we can see down here, it says pending orders 1. So that order will go through when the markets reopen on Monday. So like I said, this now leaves me with £30.57 to split between my other two investments. So just like every month, I want to invest more into an index fund and into a company that I have been following and have a personal interest in. So this leaves me with £15.28 to invest in each of the other two investments for today. So first of all, the index fund. Now I have no means to buy an additional fund, so between the two that I already own, I'm just going to invest more into the one that I have less shares in again, which in this case is still the S&P 500. So let's go into the S&P 500 and then let's buy £15.28 worth of that index. So if I go to change this to value and then we put in £15.28, and if we review the order and then we send the buy order. Great. Now finally, let's take a look at a company that I've had an interest in. Now this is actually going to be another one that I bought in a previous episode of the series, and with no surprise, this is going to be Tesla. Now the main reason for this is because out of all the companies that I own, Tesla has clearly done the best. And I feel that this month is going to be even better for Tesla with their inclusion into the S&P 500. Now recently I did a video about Tesla and you can find that video up here. And in that video I talk about why I feel as though Tesla is still a great investment to buy into and how much untapped potential they still have. So I'm going to go ahead here and buy £15.28 worth of Tesla. So we go back into value here and £15.28. Great. And review this order and send the buy order. And now again, this pending order will be ready to be executed when the markets reopen on Monday. So that's it for today's video. I hope you enjoyed it. As always, I'd love to hear from you in the comments below which stocks you aim to buy or sell this month. And as always, like I mentioned at the beginning, I have no background in finance. So this video is literally showing you what I'm doing. And if you are thinking of investing, I would always recommend that you seek professional advice before doing so. But before you stop watching the video, why not head down to that subscribe button and click on it. And if you haven't already, make sure you hit the bell as well so you get notified when my next video comes out. And as always, make sure you like the video, comment down below, and share with your friends and family. See you on the next video. Bye.